Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to go over some tweets that I've read over the past month or two. And I find it kind of funny because I don't use anyone else's opinion for anything. What I do is I come up with my own analysis, my own thesis. I run with the thesis. And then what I do is I use technical analysis to validate the thesis and that it's still intact. I watch the real estate market. I make sure that inventory is pretty low, that real estate prices are going up, and that has to turn for me to really change my viewpoint. And then I look around what I'm investing in. And when I look around, I look at everything. I'm not, I know I have a lot of uranium subscribers and maybe some oil guys, and some of them like to really focus in on that one thing. But you got to look at everything to make sure that your one thing is still that one thing that you should be in. So I look at the NASDAQ, the S&P 500. I look at diversified mining companies, what the metals are doing, what the CRB index is doing. And then I look at, obviously uranium and oil and all the stuff that I'll say more heavily weighted in. But I just wanted to go over some opinions. And these are just opinions. And opinions will not get you where you want to be. You need to be 100%, I should say, you should be able to generate your own ideas and generate your own opinions and then follow your own guidance. Don't be guided by other people necessarily. They could be experts, they could not be experts. And an opinion is just an opinion, but you got to validate it with the market. The market somehow has to tell you that you are right. These people aren't going to tell you. They're just opinions. And I'm going to go over some of their opinions because I think they're absolutely historical, or I should say hysterically laughable on some of these opinions. I'm going to go in and dive into some of their opinions because I think it's absolutely funny. So here's Kathy Wood, September 30th. It says, according to the EIA, global oil demand peaked at 101 million barrels per day in 2019, dropped to 92 million barrels per day during the coronavirus crisis in 2020, and has rebounded to 97 barrels per day 2021. Based on our forecasts for EV sales, ARK Invest believes that oil demand has peaked. And then that, I think, was in 2020 is when she posted this. And I think June 2nd, it says, what a terrible call. Oil is nearly $70 and likely heading above 100. Supply shortage and demand is soaring. This call rivals only at Joseph Schechter for missing out on one of the best trades in North America. Canadian energy names are up 400 to 600% since this call. Since the call here. Here's another one. The rise in oil price this year is a function more of supply than demand. At the turn of the 20th century, whale oil faced the same fate and whale oil prices fluctuated dramatically. If at ARK Invest's research is correct, oil prices will suffer the same fate as whale oil prices. Okay. Obviously that. And I put up here, this was pretty recent. It says, I still think oil and oil stocks are in the process of topping out for the cycle. I see very little upside and lots of downside over the next year. I expect oil to fall to $25 in next year's bust. Bonds are poised for a nice rally in coming weeks, with the 10-year yields likely headed for 1.35 to 1.4%. Here's another one from him. It says, I think oil is putting in a cycle top here. Among the big beneficiaries of declining oil prices are the airlines. Fuel costs, a big component in overall airline costs, so declining fuel prices would boost earnings. I expect the airlines to outperform in the final melt-up into a top. That's what David Hunter says. Now, I like Ferg's tweet here. He's talking about David Hunter's call. He goes, this is going to age like raw chicken left out in the sun. Remind me of this in a year. Now, I've got some other stuff down here. Here's Goldman. Goldman's Jeff Curry is bullish on a potentially decade-long commodities super cycle. That's September 28th, 2021. And I agree with this because if you attach it to the real estate market, it's probably going to be about a decade long, maybe a little bit less. And I think that's probably about where we would peak out. And Trader Ferg says, it's far more bullish than we could have envisioned. Take oil. The deficit that we can measure at the end of last month was running around 4.5 million barrels per day. That's nearly 5% of the market is in a deficit. That is such a large hole that OPEC and US, nobody's going to fix this. I've got the gold to oil ratio here. We've went all the way up to this anomaly in history of 90, and it got even greater than that throughout the month. We've been coming on down and compressing this ratio. The next stop here is to see if this lower trend line breaks on the ratio of below 20. It's probably 18 that we got to see. It goes to 18, we are in a big bull market for oil. And boy, you better be ready, because this thing's going to rip it higher. Now, looking at inventory, I got this up here. U.S. crude oil stocks in millions of barrels. We are very low on this weekly update in terms of oil inventory. And inventory is what's really going to drive that ratio down there. And we are at the 5-year low for the range. If we continue to decline and get outside of this range, we could see some really strong price moves. And what I have here on the right is the oil price, and this price over time is basically scribing out a little pattern here. If you zoom in, we are breaking out of this pattern right now on oil. And this could do a back test or retest. It could. So don't be afraid if this thing pulls up and pulls back a little bit. But we're breaking out. And to have a viewpoint that this is not bullish, I think is absolutely crazy. Given where we are in the real estate cycle, given where inflation's at, given where the oil price is doing and what the ratios are doing, given the oil price breaking out of its pattern here, given that copper's breaking out and all these other metals are breaking out, given that the CRB index is outperforming stocks, given that the stock market looks like it's topping out, given interest rates are moving up and have broken out of its upper trend line, given that the dollar is broken out of its long-term uptrend to the downside. I mean, guys, you have to negate all of these signals to say that oil is going to go down to like $25 a barrel or oil is peaking. The overall market structure, and you can see it all over the place, is changing. And it's changing, I think, to a commodity bull market, and we're seeing the ratios be favorable for commodities against stocks. So I kind of wanted to touch on this. I wanted to get you guys a little bit of entertainment, because when I read these quotes, I just laugh at them. It's not that I think that these people are not trying. It's not that we'll say that I don't, it's not necessarily that I think they're necessarily wrong or bad people or anything like that. I just think that they're wrong in this call, and they're massively wrong. So I would agree with Trader Ferg and kind of his information that he puts out there. I don't necessarily follow or align with anybody, but he's definitely more right. Eric Nuttall, however you say his last name, he is very good. He'd be one to watch in the oil sector. But with that chart behind me, that looks incredibly bullish to me. Incredibly bullish. And here's one other thing I want to point out in this chart. This was the real estate expansion phase from 70 to 80. This was the move. We had another move from about 98 to 2008, and that's the move there under that other expansionary phase, and we're starting an expansionary phase. If every expansionary phase has oil prices rocketing higher, what do you think this expansion phase is going to do to oil? It's probably going to rocket higher. And another thing, if oil was so bad, COVID couldn't break this structural move. It brought it down, but it couldn't hold it down, and it came right back up and broke out of its trend. If an act of COVID, this big problem came, and it couldn't hold oil prices down, what makes you think now that we've broken out to the upside of this pattern, that oil prices are going to reverse backwards? Like, what is the likelihood of that? So not only do we have complete alignment in history where expansion phase and oil rise together, and it's happened every time in history, and we've got the same alignment today. Like, what makes you think that this is all going to be somehow broken apart? What's going to stop this? I don't think anything can. And I think it's structural by nature, and it's demographic driven by the millennials coming into home buying years. That cohort of millennials is larger than the cohort before it, Gen X. And The baby boomers were they were larger. They went through home buying years in the 70s. So we could see something like the 70s, maybe not as long, but we'll see. Maybe it lasts good 10 years or something like that, where it could be a big move. And if interest rates move up with it, it's going to be an interesting time to see stocks and bonds go down, or sideways for stocks and bonds go down, something on the lines of that, and the commodity prices just rocket higher. So I'm long. I'm holding on to my shares. I'm in oil, uranium, and all these different metals. I'm overweight. I should say, swinging for the fences portfolios is overweight in energy. Big time overweight in energy there. I do have some royalty companies, do have some copper, not as much. I do have some precious metals, and they're in the other portfolio, royalties, some mutual funds, and the physical metals. What I think is going to happen going forward is oil is going to rocket. We're going to see the energy prices rocket higher. Oil, uranium, natural gas, coal. They're going to move. I'm in natural gas and oil and uranium big time. Then you've got what I think is coming right behind it is you're going to see the precious metals start to move up quite dramatically. And the base metals will go up with it too, but you're going to see precious metals kind of lag, and then they're going to take off. And then you're going to see people doubting this move the entire way up. And then when people don't doubt it, when they don't doubt the move, that's when you got to worry, because then we're at a top. When everybody thinks this is a paradigm-changing thing, that commodities will always be expensive, that all the people in the world are talking about commodities, that's when you got to worry. That's when you got to hit the sell button. And the ratios are expensive and overvalued. Just like stocks and just like cryptos at this time, when everybody's in it, it's time to get out. If you guys like this analysis, subscribe to the channel, give me a thumbs up, and thank you for listening. This is Finding Value.